You want that watch, you better rock a tech. You want the chain, you better cop a vest. You want the check, but can you make it stretch?
So the recession has arrived. There's some depths and duration are actually correlated and dependent on the Feds, right? So let us know in the comment section what do you think about the recession. I'm just actually going to share an article. So welcome to Root Zones, bringing you the good news and the bad news of crypto. My name is Wayne.
And my name is Manish.
Now, if you like money and crypto, make sure to hit the subscribe button. So here we go. So here we have a recession timeline. Basically, a commodity research bureau shows all the U.S. spot prices and the commodities. It's down at its lowest since July 2022. So of course, June for equities, we see that the week was slightly positive, but somewhat, there's a mistaken belief that a recession has been avoided, which is not the right point to make. So of course, you can see that even in the last few days, even the Nasdaq, S&P 500, the Russell, they were all currently down about 15 to 20%. So of course, looking at the employment report, you can see that the economic is strong and there won't be a recession based on Friday's payroll survey. However, of course, this is just to kind of give a boost, to the economy. But the reason is that most people, I mean, looking at the household survey shows that there was about 315k June that actually have kind of dropped in terms of contraction that we can see in the last 2 to 3 months, based on the household survey. And of course, full-time job has tanked about 152k, falling now in the past 2 to 3 months, right? So that's kind of a staggering numbers when in terms of jobs. And then when you look at the cycle for household survey, you can see that February 2002, December 2007, and January 2020 household still in the negative. However, payroll survey has shown slight increase, of course, naturally, because inflation is also high. So other indicators also on weakening employment. The ISM manufacturing survey shows that sub index was about 47.3. Survey showed that there was a falling employment in the manufacturing sector. Challenges in June also shows layoff. As we spoke, I think just a couple of months ago, we had about 15%, throughout some of the top Fortune 1000 companies. And also there's looking at job openings, labor turnover. You can actually see that the job openings fell about 427,000. And of course, from June onwards, we saw a layoff that actually rise. Of course, this data is actually in the US alone, but you will start to see the ripple effects that will happen in Europe and across Asia in the coming 6 to 18 months. So of course, this means for us is that, of course, as the dollar strengthens, companies lay off to actually kind of hedge over their leverage, right? In terms of borrowing that money, now they have to actually pay back, so they will cut back on productivity. So these are things that you have to take note. So if best you can do now, start to save, guys. Keep your daytime job, right? So when you look at monetary dilemma policies, of course, the bear market equities have emerged, giving us opportunities to even look at the stock market based on inflation over 10 years. I will check out our Facebook, guys. Facebook, I will be posting something about inflation, which is very interesting. $10,000 over a 10 period, and putting the same $10,000 into gold, stock market, crypto, and many other asset classes, how that would actually fare. It just gives you a nice graphical information. So if you're not subscribed to our Facebook, do check us out, Root Zones at facebook.com. So of course, the dollar continues to strengthen, implies a weak economic worldwide, and obvious that Europe is going to have a depression very soon. I don't think the US will go into depression, but definitely a recession based on the balancing act between rising inflation, reducing the inflation, and increasing the interest rate. So of course, credit spreads are widening. The yield curve has inverted, right? So a 2-year treasury close on Friday, July 8th, is about 3.10. 10-year treasury bonds close at 3%. So this is a classic sign that recession is upon us. Commodity, agriculture, metal price are in meltdown mode, implying falling futures inflations, as you can see on the chart of agricultures and metal. So Of course, during this time, we make money in the bear. Start saving, have that cash. Your cash will be eaten by inflation, and of course, that's where you find some of the it kind of offset when you find prices of great stocks, great cryptocurrencies. Especially now, we always spoke about having that billing your Bitcoin to a 50% of your entire portfolio, followed by 25% Ethereum. The remaining 25% should be all else, right? Especially during this time. So, of course, what worries is that this is the first time in post World War II history, perhaps the first time since the Fed creation in 1913, are tightening into a recession. From the chairman Powell's comment, both post-meeting press conference, likely the entire Federal Open Market Committee, the FOMC, appears to be fixated on the wrong economic indicators. Now, both the unemployment data and the CPI are lagging indicators. The majority of the indicators are leading indicators are deteriorating, right? So let's not forget that the impacts of monetary policies in the economy historically have occurred with long and variable lags. Lags meaning there's a lag time in between. So of course, the response, most consumers today don't remember the 70s inflation. We had a nasty inflation that it was eating their lunch. The survey has always been a good leading indicator. Look at the chart and note where the survey was headed in 2007, right? So 2007, you can see this junction here, guys. So now we are almost back at the 2007 mark. So of course, apart from that, we also know what is going to happen to the housing when people start to give up on their housing because they can't pay back the bank interest that they took maybe 5 years or 3 years ago. This is where you start to see defaults, right? So we had that default a couple of years ago, if as you guys can remember. But look at this: the 30-year home mortgage fixed nation average has skyrocketed through the roof. So that's not a good sign. Of course, again, if you are sitting on large cash and you have good leverage in terms of taking on debt, maybe you can wait between 6 to 18 months before looking into buying investment properties. Now, of course, the Feds are fixated on lagging indicators of employment and inflation and never experienced on the warp speed tightening cycle in the period where the economy was entering recession. So, of course, the recession can be considered as arrived. The only question left, which is important, is a 75 BPS rate hike at the Fed's July meeting will solidify what we have seen as a policy mistake, prolong the recession and make it go deeper. So on the other hand, a 50 BPS hike, while still in this article opinion is too much, would at least be a signal that they acknowledge the emerging economic weakness, right? So depending on what the Fed is going to do, date is still not given in July, but we have maybe about 20 more days before the end of the month. So let's see if they're going to raise it to 75 or 50. 50 meaning they understand the economic weakness, right? 75 means they don't know which indicator they are looking at and they are focusing on the wrong indicator. So this will give us some direction on the understanding of the Feds where they are going. So of course, Daryl has how long do you estimate this recession to continue? So based on the past, Daryl, basically we are looking at 4 years, but we will enter recession between 6 to 18 months from now. Actually started from last month. So plus that by 18 months and 4 years to actually slowly recover back in the crypto space. And this is because in the last two terms that we have seen based on Bitcoin charts, you can see a 2 years, before the 17,000 run up, the first run up that Bitcoin had. You see 2 years, 6 months, 17,000. Then you had another 2 years and 64,000, which was last year. And now, and those two terms that happened, we actually saw that the Feds have never actually raised interest rates. And this was during Obama's time as well as Donald Trump's time. But of course, with Biden, they are now trying to recover back the inflation. So we are just giving another extension of 2 more years, making it 4 years. So 16 to 18 months, good time to log in that cash, maybe to buy assets like stocks, great stocks like Tesla, Apple, Microsoft, Google, some of the 10 big players. These are good, find a good dollar cost average. Second, if you can afford a second property, do that. Of course, property with rental yield. So if you're buying properties in Malaysia will have a lot of land, and you may not find a great rental yield. and it's very difficult to sell land houses in Malaysia, you may want to look at places like Singapore, owning a second property, because there's land scarcity. So of course rental yield is there because the government is bringing talents from, we don't have natural resources in Singapore, so that's where talent is coming in. And just looking at those two principles alone, and of course in crypto we are still there. We are just buying those that has dominance in the market, like Bitcoin have low supply caps, so that will give you the scarcity effect, as well as the narrative. So everybody, and all the millionaires, billionaires are going to Bitcoin. So that's the safe haven right now for us, and that's what we are actually building. So hope that helps you. I'm going to hand over to Manish for the next segment. Manish, take it away.
Yeah, thanks, Wayne, for the valuable information. It's very informative. And today I'm going to talk about some of the DeFi coins. It's been a while which we have covered the tokenomics, and today we are going to talk about top five a social media cryptocurrency to watch in 2022. This is not something, or I'm not advising you guys to buy it. It's good to know what are these social media cryptocurrencies. It's for your knowledge purpose. Before, if you are investing it, do your own research before investing. So, the ideal of the social networking and decentralized finance are combined in SocialFi. Content producers, influencers, and users seek improved data management, freedom of speech, and the ability to monetize their social media engagements. All these are the core of SocialFi applications. So, today we are going to cover the top five such tokens. And in your screen, in the CoinGecko, you can see that iMe Lab, which is Lime, is the first token. Market cap is 1.6 million. Unit price is 006. And proposition is intelligent DeFi and AI platform powered by Telegram API with a non-custodial crypto wallet. So it has a very strong use case. They are into intelligent DeFi and AI platforms powered by Telegram API with non-custodial crypto wallet. Launched on April 16, 2019, Lime is an ecosystems with the Telegram-based messenger, crypto wallet, DeFi tool, and its native utility token called Lime. The program make it simple and quick to send cryptocurrencies, making transactions fast, safe, and hassle-free. So any user can instantly send any of their contact via their Telegram handles any cryptocurrencies they have stored in their iMe wallet. So iMe is the first messengers to integrate Binance functionality into the ecosystems. Binance Pay integrations with linked Pay ID allow you to request payments and make transfer instantly and without any fee. So the next one we have it in our list is XTM. So let's see whether we can, if the token is listed here, XTM. Yeah. All right. So the Torum XTM market value 1.7 million, unit price 0.22, value propositions the first social media platform that advocates the concept of crypto focus. Launched on November 21st, 2018. Torum is a social fi metaverse ecosystems and especially designed for a cryptocurrency users and projects. The foundation of Torum is a Web 3.0 ecosystem that include an avatar NFT marketplace for a fan of the metaverse and a yield farming hub for a DeFi player and an NFT marketplace for the crypto artist. So, in the first ever crypto social metaverse, Torum has a various features and the capability to fit your demands, whether a new to cryptocurrency or a seasoned veteran of the blockchain. So Torum aims to develop into an accessible, secure, and connected hub for a people to communicate and debate cryptocurrencies. So Torum leads the multi-chain social fi projects with over it's 200,000 users. So the next one we have is Silo. So let's check it out. What's the market cap and what is this detail about? Okay. So talking about Silo, uh, market cap 11.2 million, unit price 0.04, value propositions comms for the metaverse, building an open and inclusive Web3 run by communities. So launched in May 2028, Silo is a decentralized network for data sharing and communication supported by a layer 2 micropayments and the Silo tokens. With Silo, there is no need to rely on a centralized entity for communications between any wallet address, NFT owners, or a smart contract participant. So Silo provides an incentivized node network. A Silo network is a decentralized and end-to-end encrypted. So Silo has a multi-chain, non-custodial, NFT integrated, communications empowered Web3 wallet. In a non-custodial blockchain wallet, you can purchase and store NFTs, BTC, Ethereum, XTJ, SynNG, and all other ERC20 digital assets, in the additions to sending and receiving messages and notifications, making audio and video call send receive funds. So the next one we have it in our list is Mask. So check it out. What's this token about? Okay, so market cap 46.3 million, unit price $1.59. Value propositions: your portal to the new open internet, bringing privacy and benefit from Web3 to social media like a Facebook and Twitter. So, launched in July 2019, user of the Mask networks can transmit secure communications over Twitter and Facebook. In essence, it is a link between a decentralized network running on the top of the centralized internet. Mass network first use case allowed Facebook and Twitter users to encrypt posts on a social media platforms. The masked networks allow users to add a level of privacy on their online interactions. This is done by letting users send encrypted messages to the friends, send and receive cryptocurrency, and share files. The interact with the app all an a decentralized level. And the last one we have is DSO. Let's check it out. What is this token about? So all this token has a very strong use case in form of social media. Okay, so market cap 70.2 million, unit price $8, value proposition DSO. The centralized social blockchain is a new layer 1 blockchains built from the group up to a scale decentralized social applications 1 billion users. A novel blockchains called decentralized social DSO is intended to support Web 3.0 decentralized social network. DSO was founded in 2019 to address the issue brought on by the current capitalizations of social media. So today, a very few private firms dominate public disclosure and generate a monopolistic profit, while the content producers are frequently underpaid and undervalued. So DSO blockchain is contrast. See social media materials as a service that is open to all users without any restrictions. To create the Wave 3.0 social networks, DSO integrates with open P2P financial systems made possible by a cryptocurrency with a reliable and scalable database architecture. So this is about these platform organization designed based on a decentralized autonomous organizations, which is called DAOS, make them better adapt to a centralized censorship. These social fi tokens ideas are expected to succeed in 2022, given how strongly the demands for more decentralized system is growing. In light of this, uh, we advise you to do your own research before investing in this cryptocurrency, because these days the cryptocurrency investments is highly risk. And as of now, we ourselves also only investing in a premium tokens, but it's always good to have informations about what is going on the crypto space. So that's the reason we have shared all about this social fi tokens. So with that, I'm going to hand over to Wayne for the market updates.
Okay, thanks. Yeah, so of course, right now, extreme fear has moved up from 9. We had a couple of weeks ago, we have seen very low up to 8. Now we are back to 24. Still not out of the red race. And then, of course, we have a mixed bag of bears and bulls. Of course, 20,000 cryptos, 500 exchanges, $900 billion cap, right? Market cap in the industry. So we have seen the highest at 3 trillion. Today, we are just below 1 trillion. So, of course, top 10 still remains the same. Bitcoin we was up in the last down 2% 24 hours. Ethereum down by 3%. We have BNB down by 3%. XRP down by 2%. Cardano 2%. Solana down by 3%, and Dodge still in 10th place, down by 2%. So of course 0.006 6 cents basically. So that's something to take note. We also have Bitcoin. Bitcoin right now is being stabilized between 19,000. Next drop, I have not actually plotted this, but my next estimation of the next drop from 19,000 will be somewhere between 11 to 14,000. So I will be doing my charts just to see when that will happen. So we have to just wait until the Feds make their changes sometime this month. And of course, they are still aiming for 3.5 by end of this year. So that's going to be a wild ride in the next 6 months. So I mean, as retailers, the only thing you can do is really just do dollar cost average. And of course, again, guys, nobody can tell the future. We don't have a crystal ball. This still is considered somewhat as a gamble for a very simple reason is that in the crypto space, there's not many parameters, unlike the stock market where you can actually assess the viability of or the valuation of a proper company. In the crypto space, basically all it is basically trading, right? Like trading cards. So you buy the certain tokens, keep them, market create certain market demands, it comes into your favor, you dump the coins and move on. So we have not been successful in cash flow. There were days where we were making 17,000 US a month, and now we are just making like maybe barely $40 a month. So the fluctuation is not stable in terms of cash flow, but capital appreciation, yes, guys. So buy 2x, 3x, flip, and move on. Daryl also had something about Titano being scarce for years. Yes, we will be moving out from the rebase. I think based on the last AMA that we did, idea is to move those tokens out of rebases and into the new projects that they will be putting on liquid capital platform. So more things to come in the coming months. So we're looking forward to making that transition. And of course, most likely even doing that, we have to look at the overall market to ensure that we go back to the 3 trillion. So then there's money flow coming into projects. So with that, Manish, do you have any tweet of the day?
No, today, no tweet, not interesting tweets.
Yeah, a bit slow. The market is a bit slow, guys. So hang in there. Again, this is a technology kind of investment that we are doing, and we are not trading against the market cycle. This is our first winter, a true first winter. So as the market starts to open up again, at least we have the experience to understand the market cycle and never trade against the market. So with that, we'll see you next week, same time, same channel.
See you guys next week. Till then, take care. Bye-bye.
Take care, man.
Diamonds on your neck, bet they on your neck. You want that watch, you better rock it tech. You want the chain, you better cop a vest. You want the check, but can you